All right, should be working now. What is going on, guys? Apologies, there was a little bit of a trip up on YouTube, but what's going on? I think we're good now, right? Let me know if you can hear me. Let me know if you can see me. I think we're good. Right? Right? We good? Okay, good. What is going on, guys? Nice PO3 this morning on, hold on. Not that. Nice PO3 this morning on NQ. You can see the consolidation there and then the manipulation. Now, here's the thing. If you guys watched the ICT video that I put out yesterday, by the way, you are echoing? Really? I don't think I'm echoing. No, I don't think I'm echoing. Maybe you have Twitter open as well, because I think I'm live on there too. But we PO3'd down into what seems like not a significant area for NQ, but if you look at ES, it was a significant area for ES. So we PO3'd down to, you know, this fair value gap on ES, and it also created a divergence between ES and NQ, right? Where NQ created a lower low and ES created a higher low, as you can see there, right? So because it was a significant level for ES and there was that divergence, there was sort of a turtle soup type long from this level. The minute that, you know, ES bounced off of that fair value gap, you could have longed NQ from there as well. So that was really the only, but you had to be really quick with it. That was really the only move that was available in the morning so far. We do have Jerome Powell talking in 7 minutes. Hopefully there is a little bit more volatility today because we have more than, you can't see the chart. What do you mean you can't see the chart? You can't see this chart? It's frozen? What does that mean? Ay, ay, ay. What about now? What the fuck is wrong with YouTube, man? What is wrong with YouTube, dude? Let me see something. Ay, ay, ay. One second. Maybe that should do it. I think that should do it right there. All right. Fucking YouTube. Anyway, what I was saying, apologies for that. What I was saying was the divergence between ES and NQ right there. Higher low, lower low, and ES tapped into a major level, which was this fair value gap. The only long there was really after ES tapped this. You would have had to been super quick to see it potentially reversing here and then take a shot on NQ, right? To ride it to, my target was the previous day high, which it hit now, as you can see here. There is a potential short off of here, but Powell is talking right now. So I'm afraid we're going to unfortunately get this type of barcoding here that you see like this. At least until, you know, we get deep into the conversation. Yesterday, we took only one trade on NQ during the stream, and then I took another trade on NQ off stream. But we'll see if there's a setup maybe on gold or on some of the smaller indices like YM and RTY, because I'm afraid that NQ and ES, while he's talking, are not going to be great. So let me find the stream of these clowns of the clown show here, and we'll watch it. All right. And then later today we have crude oil inventories at 10:30, which is also a major market moving event. And then we have the 10-year bond auction at 1. So hopefully we get some volatility here to be able to trade this, because yesterday during the testimony, the price action was just atrocious on the indices. And I hope that that's not a repeat. Until they start, we can look at some of the equities as well. Tesla, I mean, it's been up like 10 days in a row, I think. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And this is the 11th day, and we are barely negative today. I did sell the 270 calls against my shares, expiring July 19th, which is not this Friday, but next Friday. So if Tesla's 270 or above, then I sell my shares for 270 plus whatever I collected for the calls, which was, I don't know, like between $200 and $300, something like that. I don't like, I am bullish on Tesla long term, but obviously I think we could see a violent pullback at some point before the robo-taxi event, because a lot is priced in here, right? This is a combination of short squeeze, Q2 deliveries B, AI hype, etc. So there's a lot to prove here with this, 70, 80% run in a matter of a few weeks. And obviously all that stuff can't come to fruition. But Tesla, if it's going to keep continuing to run like this, it has to keep surprising the market with the possibility of what AI can do for the company, right? But the minute that story dies down and there's no show and prove, I think Tesla will see a violent pullback. It happens all the time, right? It happens. This is not the first rodeo. I've gone through and showed you guys all of the summer run-ups before. So, all right, we see Jerome right there. I moved mine to 310. Oh my God. Yesterday he was grilled by Warren. Today he's going to be grilled by Maxine. It was an amazing Tesla trade. Appreciate you. Markets go up and down because the computer program is controlling them. I don't know what you want me to say to that, dude. Mad Maxine. That is the best fucking name, dude. Mad Maxine. ES made relative equal highs too. Yes. Yes, we're gonna, I do hope that there is more of an indices move here, aside from just ping-ponging up and down. Gold. Oh, what is this level on gold here? Wait a minute. There might be a nice short on gold here, guys. So, especially if he talks a little hawkish and rates go up while he's talking and the dollar goes up, I think this is a short on gold here. I would rather see this 3-minute fair value got disrespected first. But if the dollar base is out here, at least just for the short term, I think there's a potential short on gold here. I would need to see at least this 3-minute fair value gap disrespected.
Is titled The Federal Reserve's Semi-Annual Monetary Policy Report. We like creative titles here, and that is our traditional title for Humphrey Hawkins. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I'll note at the outset this hearing has a hard stop at 1 p.m., which we will strictly observe, which seems only humane. I'll now recognize myself for 4 minutes for an opening statement. Thank you, Chair Powell, for being back with us today. With prices increasing more than 20% since President Biden took office, inflation remains top of mind for American families. In fact, only a quarter of Americans describe current economic conditions as good or excellent, according to the most recent data from Gallup's Economic Confidence Index. Despite President Biden's gaslighting, inflation was not 9% when he took office. It was out of control. The out-of-control inflation we're experiencing now is something that this administration did not inherit, but is a product of their policies and their overspending. The nearly $2 trillion partisan and fiscally reckless spending as a part of the American Rescue Plan poured fuel on a smoldering inflationary fire. After a delayed response to runaway inflation, the FOMC has acted with a historic pace of interest rate hikes to ease the pain caused by Democrats' failed economic policies. It is a response, not the actual disease, but the response the Fed is trying to tame these flames, but it's a response to Democrat policies here on Capitol Hill in the administration. So far this year, inflation has been more persistent than many, including the Fed, previously expected. There's still work to be done to reach the Fed's 2% target. As I've repeatedly said, the Fed's, as I repeatedly said, the commitment to independence of the Federal Reserve is of utmost importance, and it is critical, especially in a political year like this. Just as, Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy. However, despite your best efforts, the Fed independence remains at risk. And unfortunately, calls are coming from inside the building. Under Vice Chair Barr, the Fed's regulatory and supervisory agenda has become politicized. Most notably, the development of the Basel III endgame proposal has been a mess. This process has been cloaked in opaque standards and timelines set at meetings of unaccountable global governance bodies. The Fed has promised to process 410 almost universally negative comments, public comments, regarding the unjustified and underutilized initial proposal, or an underanalyzed initial proposal. Recent press reports, which seem to be the only way Congress gets details on the Basel III endgame progress, and your comments yesterday indicate the Fed will finally conduct a long overdue quantitative impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before this committee, you stated that the initial Basel III endgame proposal will undergo, quote, broad and material changes, end quote. Yesterday in the Senate, you said the board supports reissuing the updated proposal for public comment. I'm concerned that press reports also claim the Fed will tuck any changes to the proposal into this quantitative impact study. That study, including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full reproposal, full stop. Full stop. Failure to do so will result in an immediate Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think the Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell, Chairman, Board of Governors of the Federal Reserve System. Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging. Despite inheriting an economy from the prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This is not only because of President Biden's strong leadership, but also because of the historic legislation signed into law by President Biden, which has resulted in lower costs, created more jobs, rebuilt our infrastructure, supported small businesses, eliminated mostly junk fees, wiped out more than $144 billion in federal student loan debt for 14 million borrowers, and cut child poverty in half. President Biden is and will continue to advance policies that are...
Man, I can't listen to all this. I'll turn it back on when he's talking. What were you guys asking me? How many snakes are hiding behind that? Jerome looks like he's been short NQ for the past year. Yeah. Yeah, the lighting in that room is not the greatest either. Did I just hear Z say, expecting a violent pullback on Tesla? Is that short and GC invalid? No, it's not invalid. Yes, just say yes. Okay, yes. Can you tell us why you're bullish on Tesla? Absolutely not. I'm not going to waste everybody's time on here talking about that when I've done a full detail in the last 2 Tesla videos I put out. So if you don't want to take the time to watch that, then don't waste my time and everybody else's by trying to get me to give you a breakdown here. I put in hours of time putting those videos together. So watch them. If they're not worth your time, then that's fine. But no, I'm not going to go over it. I didn't know those videos existed. Really? You guys don't get notifications from this channel? That's pretty concerning. You guys don't get notifications from this channel? No, I do not. That's wild. Either y'all aren't subscribed or YouTube is doing me dirty. I might finally sell calls on Apple here. I cannot believe Apple's 231. That is so crazy. I might sell calls on Apple here. Let's see. Oh. August 16th, 250 calls. I can sell for 200 bucks. 255 calls. Yeah, I'm selling the 255 calls on Apple. I'm selling the 255 calls on Apple, son. Just type this out real quick. Selling 255 calls on Apple expiring August 16th for $1.30. Do not do this if you don't own 100 shares in Apple or you don't want to get your called. Cool. I put that in the option selling section. But 255 calls on Apple, that is money right there, man. 250, that's like free money. 255 on Apple is another that's like another 10, 11% on Apple. Hell yeah. I'm willing to do that. That's free money right there. You got in, Tony? Hell yeah, that's good.
Squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Federal Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We've also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54 and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the committee's longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We have also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. Our restrictive monetary policy stance is helping to bring demand and supply into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Well, thank you, Chair Powell. I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you got questions about it yesterday, but I think we need further clarity. Your testimony about Vice Chair Barr's discussions with the FDIC and with the OCC on the next steps for the Basel III endgame. You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make,
Man, that gold trade worked out really well. I saw some of you took it. I saw some of you took it. What is the level? 2392.2 on GC from? That line right there is, if you look at the 1 hour or even the 15-minute, you'll see that it's just a previous high. How did I get that? Yeah, it's just a previous high. I apologize. That right there is, yeah, it was just a previous high. And there's also a 15-minute fair value gap there too. Now, what I'm looking at here on NQ, what sucks is that it left these equal lows here. ES did too, by the way. It left these equal lows right above that fair value gap. They both have the same one, both ES and NQ. So there are there are a couple of plays here. There is a potential long from here. There's a potential short from here. It's very hard to say which one will get there first. It looks like in the short term, a long to here might get there. But we're dealing in the fringes here, right? This is like scalping territory. Nothing irks me more than someone dressed formally wearing an Apple Watch.
Existing regulatory structures. Okay.
That's right.
All right, so let's get into the question of balance sheet as quickly as we can. 2.5 years ago, you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. That's 2.5 years ago. Where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress. We think we have a good ways to go. And as I mentioned, and as you just mentioned, we've now slowed the pace really with a view to getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand. And we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project 2025?
Not really, no.
You've heard about it?
I really don't focus on these things at all.
You don't focus, but you know there's something known as a Project 2025? The reason I'm asking you is because one proposal is to get rid of the Fed's dual mandate to promote only stable prices, but also maximum employment. This is your mandate. These are mandates, right? This is what you do. Is that right?
We do serve a dual mandate, that's right.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
So the question of which mandate we serve is very much a question for Congress. My own view has been that the dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are
What do you do to get maximum employment? What do you do?
Well, basically we have one tool on the economy, and that is we raise and lower interest rates. You'll find, though, that anyway, we certainly at the Fed do believe that the dual mandate has been a good thing, and it's enabled us to. It has not stopped us from controlling inflation when that was the thing that needed to be done.
And so, while of course I understand you may not have seen, heard, or read Project 2025, are you familiar with an effort in the country to get rid of diversity and inclusion?
I see these things mentioned, but honestly, we're pretty focused on our
How is that his problem?
stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
I spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally, are those that do a really good job on diversity and get the best out of people and attract a broad, diverse range of talents to the table, and people feel comfortable speaking. So that's the way we feel about it at the Fed, and that's what we've been doing and will continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent. That's one of the things that our really good U.S. public companies do well.
Have you seen improvement during your tenure where diversity and inclusion has created opportunities for more jobs and have to reduce the unemployment rate?
Certainly seen, I think you see over the course of my long career, a big change in diversity and inclusion. And you see that in the private sector and the public sector, and I think that's generally progress. I do.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty, she was able to gather important data about what was going on in the private sector. And what she discovered was that many of the CEOs and others welcomed the opportunity to learn more and to do better and to get assistance. And we saw improvement with diversity and inclusion. Have you seen that?
What the hell does this have to do with him, bro? Like, the questions that they ask him make it easy to have sympathy for the Fed. And it's not easy to have sympathy for the Fed. I don't understand what they think they're going to get out of him. There's a couple of things I'm looking at here. Hey, anyone from India? Yeah, we're all from India, dude. This right now, this is not the NASDAQ. I'm trading Nifty 50. This is an Indian stock market channel, and we are trading the Indian market. What I'm looking at on gold here is, again, gold did not take out its 15-minute fair value gap, did not even take out this low. So I'm looking to see if gold can trade back up into this 5-minute fair value gap. There's also a tiny inverted gap there. And then possibly back down for a 2-to-1 to at least this low. Same thing, there's a similar thing on the NASDAQ. Although the NASDAQ, okay, never mind. NASDAQ just took out those fucking lows. So did ES. What time is it? Ay, ay, ay. And gold is taking out that low too. Into that 15-minute gap.
Submit that question maybe in more detail in writing, and maybe you'll have a chance to reflect on that. Back in February, you were on 60 Minutes, and you said the U.S. budget deficit, the national debt are unsustainable. Do you still view that the U.S. is on an unsustainable fiscal path?
I do. I think I tried to be clear that the level of the U.S. debt is not itself unsustainable, but the path that we're on is unsustainable, and I think that is not controversial.
I think many of us certainly agree with that, and we know that when the deficit's at 3 times the economic growth rate and growing, it's of concern, and it's contributed to inflation. Just 3 years ago in Jackson Hole, Wyoming, you gave a speech where you were confident that inflation was transitory, which I think we've come to realize that's not the case. This hearing is sort of a can't-miss opportunity for the Fed to demonstrate some humility on the monetary policy decisions, which some on this side of the aisle particularly think have made inflation worse. Your August 2020 Jackson Hole speech, you said the flexible average inflation targeting framework regarding 2%, that you would let it run above 2%. Was the Fed blinded by the previous 20 years of global change that was deflationary and or you were not alert enough in 2020 to be more cautious about that change in policy?
So we were certainly mindful of a long period of time in which there have been very low interest rates, but also very low inflation, suggesting that the neutral interest rate must have fallen quite substantially. That was the standard view. The thing we didn't see coming was the pandemic. It's not like everything went off the rails. It's like we had this pandemic, and it really changed the way the economy is working. We had a big crisis. We did a lot of things. So the concerns that led us to, those concerns that we were in a world of very low interest rates all the time.
But now wouldn't you say we're in a very opposite situation where because of reshoring and tariffs and other policies that are quite inflationary?
I would say this. Those concerns are, right now we have the policy rate in the mid-5s, right? And we see the policy is restrictive, but clearly interest rates, the neutral interest rate must have moved up, at least in the short term. So I think that's the question we'll be asking ourselves in our review, which begins at the end of this year.
We look forward to that.
How much of what we did in that time period is relevant to the new world where rates appear to be higher?
The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Thank you, Chairman, and welcome, Chair Powell. It's great seeing you. Last time I saw you, we had the gracious pleasure of you visiting with me in my office, and we discussed a great variety of things. Thank you for that visit. Now, Chair Powell, this year the Fed tested 31 banks, up from 23 last year. Is that correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common equity tier 1 capital requirements after observing losses of nearly $685 billion. Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide you with, you may have heard this, but I want to share it with the nation because your vice chair, Barr, made this statement, and I wanted to put this in the record, his exact quote from this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario. And this test shows that we do." I thought that was a great statement of your record. Now, let me ask you my question. It's simple. Will the 2024 Fed stress test results have an impact on how prudential regulators roll out a new and updated capital proposal?
So the two are really two different things. There's the Basel III capital proposal, and then there's the stress tests. So, and really the Basel III, as I mentioned, we've discussed, we're almost ready to put forward for further comment a revised proposal with material and broad changes to it. The stress tests are a different thing, and of course we realize we have to adapt those over time and be open to changes, and it has evolved significantly over time, but it's really a separate thing from the Basel III endgame.
Give us a little bit more information on the Basel III, because I worked with you with this. Our work goes all the way back to the Obama administration when we responded to that crisis with our bank.
Man, Basel III Endgame sounds like something out of Avengers, not gonna lie. What I'm looking at here is, so we took that liquidity above London high on gold, but we have the previous day high right here. On the 1 hour, this certainly looks so far like a bullish pattern. Right? I know that I was looking at a short earlier, but that short was just to this level here. We are now in this 1 hour fair value gap, and I am wondering if we can get a bounce to that previous day high, because we have not yet shifted structure at all on the 1 hour. So yeah, I think this is going up. I think this is going up. And we swept that 9 a.m. liquidity too. Let's see if we can get a retrace in here.
Order submitted.
What we do in the end will be consistent with the Basel agreement, and it will also be consistent with what other comparable large jurisdictions are doing.
You're doing a great job. Keep up the good work.
We'll recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you very much, Mr. Chairman. Thank you very much, Chairman Powell. And also thank you for continuing to indicate that you will look at the entirety of the economy, the whole economy. We appreciate that. So one of the nation's largest banks recently warned in a memo, and it's also been voiced by smaller banks, that the current pace of regulations such as changes to capital requirements and lowering debit card interchange caps could lead to new fees associated with checking accounts and other increased costs for small businesses. This does come amid expiring tax provisions that are sunsetting as we speak, that are critical for small business, such as the R&D tax credit, interest deductibility, and bonus depreciation. This does raise the question, are you considering how these regulations and tax increases will directly work against your mandate to achieve 2% inflation? Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you are stating will occur. And a Basel re-proposal and adequate comment period are certainly very welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to re-propose Basel III for comment period. Could you clarify if this means the proposal will be re-proposed from scratch? And any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form of it would be. The sense of it would be, though, that we're making material changes and that we would want the public to have a chance to look at those changes in the light of the way they play off against the quantitative impact survey, and should have a reasonable time to comment on those. In addition, we're focused on one big area, but there are institutions that have made comments all across the spectrum, and we're reading all of those carefully. And we're not going to republish all of those. Some of those we can just make changes and move forward on. So it's going to be a very labor-intensive, time-consuming process.
Okay.
Writing these things up takes a long time, and we're going to get it right.
Good, that's great. Obviously, Canada recently postponed, as did the EU and UK, for international competition standpoint. It seems to make sense, and so that's appreciated. Chairman, would you agree that excessive spending, increased taxes, limits on domestic energy production, in principle, are a cause for higher costs for business, contributes to inflation, and as well tightens the labor markets, kind of running contrary to your two mandates?
You're asking me a kind of a political question there. I don't want to criticize a platform of economic fiscal policies that are not really ours to decide.
It's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing, was part of your thinking taking a more holistic view of economic conditions?
Yes, very much so.
Okay.
Yeah.
Okay. Chairman, is there any data to support the so-called greedflation? This term greedflation somehow has caused inflation. Is there any data to support those comments?
So we look at it that this inflation has been called.
I think Tesla looks potentially good. Let me check what the pre-market looks like. I think Tesla looks potentially good for a long here. Man, the colors on my screen are so faint. I think Tesla looks potentially good for a long here. So we took liquidity below pre-market high. There is a potential front run here on Tesla, but you could wait until we get above pre-market high once again. There's a potential front run here on Tesla. So you could wait for it to break structure on at least the 5-minute. Still in this gold long. We retested the inverse gap. I mean, it's slightly green now, but that's not obviously not what I'm looking for. I'm looking for the larger move here for about 440 per contract. It's up about 100 per contract now, 60 to 100. I mean, to be honest, on commodities, TradingView P&L is really slow. So if you compare this to what you see in NinjaTrader, for instance, or Tradeovate, it's really slow compared to that. But the thesis for the trade was that we came down into a major area of liquidity, 15-minute gap, which is also the hour gap, right? We had rejected off London high previously. So that is an interim liquidity zone. And for me, I think there is a larger draw on liquidity, which is the previous day high, right? So unless you think that London is the major liquidity zone, you know, previous day high is my target, my larger target. Plus, we had cleared here. If you look yesterday, we cleared the equal lows and took out the weekly low, right? And then we are seeing bullish price action on the hourly. So I'm hoping that, you know, that high time frame objective that I have, right, where price to me is still bullish, can conjoin with this low time frame thesis here to take us back up. Now, could that be the draw on liquidity, that London high was the draw on liquidity and that's it? Yeah, of course. Price can do anything, right? I really want to make sure that you guys don't get attached to the idea that an A+ trade means 100% hit rate. An A+ trade means these are the best conditions for you to win. It does not mean that you will win every A+ trade. So I hope that is clear, because I think that a lot of people get that twisted, right? By the way, we also have a breaker here. So this is a bullish breaker. Go back and watch my ICT video that I released yesterday, and you'll see what a bullish breaker is and what a unicorn is, right? So you have a low, a high, lower low, higher high, and we are retesting the 1 hour fair value gap in the 1 hour breaker. So I really like this trade. I like the high time frame plus low time frame confluences, and I think that that this is an A+ trade in my book. This is up like 110, 120 per contract. There is an immediate term target here, which would put us at a little more than 2 to 1, right in this 5-minute fair value gap, right? And I'm okay with having shorter term targets that are 2 to 1, especially for day trades. But I think from a larger term target, if this structure is maintained, as long as we don't break structure here, if this structure is maintained, then I think the eventual target will be previous day high, right? Whether we get there today or tomorrow, I don't know. But if this structure is maintained, then I think previous day high is the ultimate target. But if you're dealing with day trades, especially if you're on a prop account, and you're dealing with day trades, it's okay to have shorter term goals, obviously, right? Shorter term profit goals, as long as the risk to reward for that trade is still clean, right? So anyway, I'm wondering here if my stop is a bit too tight. If I move my stop, I'll have to move my take profit. I tend not to play around with my stop too much. My stop was based on the 1 minute inverted gap. But now that I'm looking at the 5 minute and the 15 minute, I can see a case where my stop does get taken and the trade still works out. But my trade was based, like I said, off the 1 minute time frame. So I tend not to move my stop, and I'll likely not move it here. If it gets hit, it gets hit. I don't really have these emotional tantrums anymore like I used to when I was a younger trader, right? Where if my stop gets hit, it's the end of the world. Like, it's a fucking trade. If it doesn't work out, there's another one, right? You're much better off letting your stop hit than not having a stop at all. So if my stop gets hit, then I usually just reassess and see, you know, if the trade is still valid. I could move the stop to the low here. So that would be another 8 ticks down, which is $80 in GC. But then I would have to move this to accommodate, right? So right now, this is a 2-to-1. Say that I moved this down here. That means that my take profit. No, I don't want to move that. That means that my take profit would have to be here. Like that. Which I don't mind either. I mean, I think that's realistic. So this is risking 280 to make 560, essentially. So 280 per contract. Now there is a micro, which is called MGC, right? If GC is too much for you, there is a micro called MGC. But we'll leave this and let's see how it plays out. Oh, man. This guy, his name is Gabarino. Crazy wicks on NQ, man. There is now, I was going to say there is bullish divergence between ES and NQ. But not on the 5 minute. On the lower time frames, I bet you there is. Oh, not even. Long on Tesla. Bro, I gave you my analysis. I don't know what more do you want than that.
Will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity?
On the liquidity thing, I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that because some of these are novel ideas, and we understand that.
All right, as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So I think that is very important that we have that because we had a mucked up process with Basel 2.0, and I don't think we don't want to repeat that. And I have a little time left. I'm going to yield to my colleague from Pennsylvania.
Yeah, I like a long on Tesla here. I like a long on Tesla here from this 5-minute gap. The ICT video is great. Appreciate you. Check out Amazon. Broke trend to the downside, but we're PO3ing. Okay, let's look at Amazon. Yeah, I mean, this is not a long yet, but you did PO3 below yesterday's low or Monday's low. But it's not a it's not a long yet. You wanna get some sort of confirmation to the upside, right? But yeah, it is something to watch for sure. Hello from Indonesia. What's going on? Let's see how gold is faring out, guys. Still up like 20 bucks on this trade. Holy shit, this shit came from like one tick of my stop. What? Yo. Oh shit. I didn't see RTH right there. Yeah, we have equal lows here, right below RTH. This is no bueno. I don't like these equal lows, guys. That makes me nervous. I think I'm gonna break even on this trade, guys. Yeah, I'm out of this trade, guys. I'm getting out for $80 per contract. Minus $80 per contract. There's something I don't like here. It might very well work out, but I don't like the equal lows here. This to me is a recipe to get wiped out. And so, oops, the fuck. And so if my stop was right there, and almost got ticked, by the way. But if my stop was right there, that and those equal lows are there, that's just bait. And I'm not trying to be bait. So those equal lows, not my jam, and they will likely get taken out, especially since those equal lows are in the RTH gap, right? You have this entire gap here. Not for me. Not for me, unfortunately. But you got to be nimble and quick. when the trade doesn't, when the trade does no longer does it fit your criteria, and when it starts creating price action that's potentially dangerous to get your stop taken out. So I took like a minus $80 hit there, much better than minus 300 if my stop gets hit. So I'm okay with that. I'm okay with that. Can you explain why you don't like GC equal lows? Watch my ICT video. J Rod, why do they make you nervous? Watch my ICT video. Can you look at Nike, please? I did a whole breakdown of Nike yesterday. I did a whole breakdown of Nike and of Chipotle. So check it out in the Discord. Any thoughts on JPM? Thoughts and prayers? Despite what's going on with Nike, do you like their shoes? I love their shoes. Yeah, there's no way to catch that. This right here, there's no way to catch this. Should have bought the Russell. Sometimes I feel like the level of people that comment should be nowhere near a brokerage. Your ICT video in your YouTube and Discord? I don't know what that means. What do you think of Nike at these levels? I did a whole write-up on Nike yesterday. A whole write-up on Nike. Check it out in the Discord. As detailed as it gets. Tesla squeezing. Yes, I told you guys Tesla is along here, off that gap. Hopefully, those of you that wanted to long Tesla, long that off that gap. Up nice on Tesla calls. Thanks, Z. Hell yeah. Can you share your view on Palantir? What kind of view? Is your ICT video on your YouTube channel and your Discord? Yes. Is there a bus volume or my speaker? I don't know what that means. Bus volume? How many months out of the year are you usually traveling? I don't know. A lot. Up or down? YouTube crowd definitely back at it. Hopefully, those of you that wanted to long Tesla, like I said, the long from that 5-minute gap is probably good. Even though I troll sometimes, you're a real one for the free content. Appreciate you. And thank you for trolling.
Collision between very strong demand as the economy reopened. Remember that there had been fiscal transfers. We had rates very low. You know, those things were done because we thought we could be looking at a very, very bad economic time. As it turns out, the economy reopened and demand spiked very high. People had saved a lot of money because they couldn't spend. And so there was tremendous demand and there was constrained supply. And what you got was inflation. And you got that everywhere in the world. That's what happened. So what's happened to bring inflation down, we've made quite a lot of progress on inflation. To bring inflation down, the Fed has been working on, with restrictive policy, on cooling demand. That has been working. And the supply side has been healing. And the negative labor participation shock has essentially reversed, adjusted for. So it's kind of working out as we had expected.
Thank you
very much, Chairman.
The gentlewoman from Georgia, Mrs. Williams, is now recognized for 5 minutes.
Thank you, Chairman McHenry, and thank you, Chair Powell, for joining us today. As the president of the Federal Reserve Bank of Atlanta, Raphael Bostic has so rightly pointed out that combating economic inequality is a critical part of the Fed's dual mandate. When everyone in our community doesn't have the opportunity to contribute to their fullest potential, the economy is not firing on all cylinders. Nowhere is this more apparent than in my home city of Atlanta, which has more Black-owned businesses than any other city in the country, but is still among our nation's leaders in the racial wealth gap. I applaud you and your staff at the Federal Reserve for the work that you're doing to make sure that the economy works as well for the hardworking people of Georgia's fighting 5th District as it does for those in the top 1%. This includes helping to make sure that financial services are affordable and accessible to everyone. As the Fed moves forward with the proposed changes to Regulation 2, I know that protecting access to affordable and accessible banking is at the top of your mind. That is why I was concerned when I started receiving outreach about the unintentional effects that Reg 2 proposed rule would have on marginalized communities, including my constituents in Atlanta. Specifically, I heard about the impact that the reduction in interchange fees proposed by this rule could have on bank-owned certified accounts in my district and across the country. The Bank-Owned Initiative is a partnership between financial institutions and trusted community-based organizations to offer low or no-cost bank accounts to unbanked and underbanked individuals. Access and affordability are at the heart of the changes that you're proposing, and I couldn't agree more with those goals, but we have to make sure that programs designed to serve unbanked and underbanked individuals in marginalized communities continue to flourish. In response to these concerns, my colleague across the aisle, Mr. Lukemeyer, and I sent a bipartisan comment letter in March to you highlighting those very concerns and urging that the final rule not negatively impact low and moderate income communities. Chair Powell, how does the Fed take into account how regulations impact constituents who don't have an attorney or an interest group to submit a comment on their behalf?
Well, let me say first, we have heard those concerns that you raised and others have raised about aspects of the proposed rule.
I mean, like, I have no problem with these questions on their surface, on their face, right? Like, I have no problem with these discussions. If there's a discussion to be had there, I just don't understand why you would think that Jerome Powell would have answers to this. The dude runs the fucking Fed. The guy doesn't run a charity. And more so, I think it's even more cynical that they're asking him about policy, and policy is something that they should be doing. Policy is their wheelhouse. It's not his.
Order submitted. Order submitted.
Oh my God, man. We keep getting cucked by fucking RTH.
Order cancel. Order canceled.
Yeah, for me, we need to cross at least half of RTH for me to feel comfortable with the long. And ES has equal lows, right? Like gold, ES has equal lows above RTH, which I think will get taken out. Joe says half of RTH is also London low. That's a really good point. See, this is why you make fucking adjustments, man. This is why you make adjustments. Well, the stop wouldn't have gotten taken out yet, to be fair, but very close. My point is, you know, they're asking Jerome about politics. And they are the ones who get paid the big bucks to make policy, not him. Right? He just fucking raises and lowers rates. How could such a blunt instrument address specific communities in Atlanta or fucking Wichita or whatever? That's their job. They're the state's representatives. Is interest rate racist? What? What? Man, there is nothing here. I want to give you guys a winning trade, I promise. And we will. It will happen. It will happen. It's just, and unfortunately, we have these clowns talking. Tomorrow, CPI comes in pre-market, and I will be live for that. The next day, PPI comes in. Say one sentence in Hindi, bro. Kidar jana hai bolo bhai. Did the news leak yet with CPI? No, wait until towards the end of. Until towards the end of the market. I think he said something about your mom. No. I said, where are we going, brother? That's what I said. Now, if you heard the word gandu somewhere in there, or benchot, then you would have known it was a swear word. How many languages do you know? This is a very different question than how many languages can you cuss in. I can cuss in almost every language. I don't know Hindi, no. I don't know Hindi. I just pick things up based on where I travel. Desi accent? Oh, I can do a Desi accent. Can you cuss in Persian? Yeah, of course. I can cuss in Persian. Can you have a full convo? In what? Hindi? No. No. Not even close. But if you tell me what to say, I could probably pronounce it very well. Yeah. Prove it in Russian. Мой хуй болит, потому что я хочу пизду. Told you I can cuss in every language. And for those of you that speak Russian, type out what I said. RTH stands for regular trading hours. So there's a gap between when futures close at 4:10 and when futures open at 9:30, right? Open, right? There's no close and open really besides between 5 and 6. But it's basically just taking, removing the after hours and pre-market, right? And this gap tends to be something of a draw. So in general, when you have like equal lows at this gap, as ES and NQ are pumping, but in general, when you have equal lows at this gap and that gap hasn't been taken, that's usually going to be a draw. And I think ES will still draw there. Like whether it goes up into this fair value gap and then comes back down, which it looks like that's probably what it's doing. Oh, this Richie Torres guy. Nobody annoys me more than this motherfucker. To be honest, they all annoy me. Elizabeth Warren, Richie Torres, the dude with the bow tie and the Apple Watch. This motherfucker, this dude will do anything for $1. This guy will do anything for $1. Why are you guys so obsessed with race? I don't give a fuck what race that guy is. I don't care. I'm just saying, if you know, you know that dude will do anything for $1. If you look up the interest groups that support him, I'm thinking of a very particular foreign interest group that refuses to register as a foreign agent. He is like their spokesman. The dude is more pro that country than America. Oh, big divergence between NQ and ES. Bearish divergence. I want to short ES to get down to I'm gonna take a, what the fuck? I'm gonna take a crack at a short on ES here to get down to those equal lows.
Order canceled.
Wait, what the fuck?
Order canceled.
Ines Future says APAC. Yes, that's who I'm talking about. Oh, yeah. That long on NQ would have, well, it wouldn't have worked just yet, but it would be up for sure. I was hinting a September cut.
Producing state in the country, but yet eggs for each one of my kids goes up 40% this past year, and take that times 6. I'm no economist, but that adds up real quick, and I think I'm reflective of a lot of families across the country right now. So, Mr. Chair, one of the things I'd like to talk about is, what we are focused on and what your department's working on at the Fed. The U.S. Federal Reserve, in my opinion, should be more focused on folks like my hometown of Bondurant, Iowa, versus what's coming out of unelected bureaucrats in Brussels, Belgium, for example, which is one of the reasons I'm so grateful that you have talked about reopening Basel III for a conversation on what's in the best interest of the American people. I applaud you and your team for this. While I would like to see Basel III candidly scrapped altogether, I think that there are 3 things in this proposal that we've got to look at immediately. 1, the impact of credit availability, especially to ensure that it won't be tighter credit conditions on small businesses back home in places like Iowa. The ability for farmers across the country to be able to hedge their grain, corn, soybean, livestock in a new Basel III conversation, and ultimately eliminate the downstream effects on American banks being held to higher standards and very clear in Basel III than what's being held in Europe. So with that, I want to readdress your team's attention to the letter I sent in a bipartisan way with Senator Jerry Moran, specifically emphasizing the negative impact of increased bank capital requirements on the economy, our constituents, and ultimately our ag producers across the country.
He's just talking about agriculture. All right, so I was stopped out on this scalp short here on ES for 125 per con. I think I'm looking at GC. I think this would have worked if it didn't hit my, yeah, it wouldn't have hit, it would have come again like a couple points within the stop. But eventually, would have played out. Is Tesla positive on the day or not yet? No, minus 0.22. It might end the day positive. Although, if I was long, I probably would have taken profits already over here. What? Wait, what? The fuck, man. 1 second, guys.
What it would be, but that something like that is right. You know, we'd have a typical phase-in process at the end of the, quite a lot of work to do to get to a final rule, and then there'll be a phase-in process. I don't know exactly what the date would be.
Thank you, Mr. Chairman. I just want to know kind of a timeline for my folks. I mean, there's obviously 2026, or take my advice, scrap it all together and we can start over, if we even need to do that. Let me ask very quickly, with Chevron overturn, is there anything the Fed is doing to identify areas where maybe we have over-regulated at the federal side and you're self-policing right now?
Under the Chevron decision? Yeah. I mean, again, our view is we're very focused on obeying the law and reading the actual words of the law and interpreting it according to the words that are in the law. This is the way we approach things, and I'm not sure how much will change. Basically, a court will be doing that with a little bit less deference to the agency, but we think we're already interpreting the law pretty carefully. So, and again, these are brand new decisions. There are several of them, and it's way early. We're just studying them now.
Thank you, Chairman Powell. Thank you, Chair, and I hope you continue to self-police. It's much appreciated to you and your team.
We'll now recognize the gentleman from North Carolina, my friend, Mr. Nickel, for 5 minutes.
Thank you so much, Mr. Chairman. Welcome back, Chair Powell. I represent a Republican-leaning, very purple district, so my constituents sent me here to get things done. It's been disappointing that we're on track for what I believe could be the least productive Congress in our nation's history. But this committee has done some good bipartisan work on the digital assets market structure bill and stablecoins. It's a place where I have hope that we're going to see some action in this Congress. I know you and I have privately spoken about stablecoins, and here in the House, in a bipartisan.
They're talking about crypto.
Pass a bill to regulate payment stablecoins. This committee voted in favor of the legislation in a bipartisan way last year, and there have been numerous calls from this committee to you and to the Fed asking that you prioritize working with Congress to help push this legislation forward. We've enjoyed our conversations with staff as well. Can you commit to directing your staff to finalize and support passage of stablecoin legislation this year?
So we've been, really pleased to take part in this process, and very much appreciate being included in it, and we'll stay with it. We think it's really important that we have a federal framework for stablecoins, and again, we'll be all in on working with you to get that done.
Thank you very much. Big issue for the folks that I represent, housing. The rising cost of housing hits my constituents especially hard in North Carolina. Our ranking member, Maxine Waters, has made this a big priority for the work that we do in the committee. In North Carolina, we've got 343,000 households that spend over half of their monthly income on rent, leaving little.
After taking this liquidity, I still think there's an upcoming short on ES here. But it all depends on what NQ is doing. Because there's that divergence, right? So you have that divergence, which is crazy divergence here. Man, that GC would have worked out. That GC would have worked out nicely. I don't know if it would have been 2-1 though. I think we took the trade from here. That. Yeah, it definitely wouldn't be 2-1 yet. 2-1 was up here. But it would have been. Would have worked out for sure. Would have came twice within 1 point of our stop. I'm monitoring ES here for a potential short back to RTH, but NQ is the weaker one. I still think that RTH will get taken out at some point. Obviously, with Jerome Powell talking, you know, you're getting asymmetrical price action, right? But as long as you don't do anything too stupid, you could still set up trades that won't burn you. Yeah, I think there's a short here on ES.
But so this is what we are very focused on continuing to work toward.
Thank you very much, and I
Thank you.
The gentlewoman from Texas, Ms. De La Cruz, is now recognized.
Thank you, Mr. Chairman, and thank you, Chair Powell, for.
I mean, how did you get stopped out of GC? Like either you closed it, which is fine because I did too, or your stop wouldn't have hit. If you're saying you closed it, yeah, that's fine. I mean, I did too. I want to see ES flush here. If it's gonna go short, I want to see it flush here. Your original stop hit. No, it didn't, bro. The stop didn't hit. Look, my stop was there. Right? It came within 1 tick here, and then a couple times it came within a couple ticks. You moved your stop down. Okay. And I also moved the take profit up. Yeah, I don't care what the OG stop was. I moved it. So why would you keep your original stop if I moved it?
Order canceled.
They're saying some people got stopped. Okay, well, you didn't move your stop. Well, I can't control everybody's screen, bro. I want to see a flush here for the 1150 macro. But if NQ makes a higher high than this, then I think it's probably not going to happen. Let's see.
For the necessities of life when you don't have much of a financial safety net, the pain starts right away. We get that. And so it is for those people, among others, that we are doing everything we can to get inflation under control and stay at the job until it's done. In terms of the causes of inflation, you know, the inflation that we're having is not that different from what other advanced economies around the world are having, and it really results from the pandemic comes along. Inflation is low. The pandemic comes along. We shut down the economy. They're sent checks to replace their income. They can't spend that money because they can't go to the movie theater or to a football game because everything is closed. So savings go up, and so people are spending a lot. Meanwhile,
Chair Powell, I have only a minute left, so I yield my time back. I want to shift gears real quickly. I continue to believe that the federal banking agencies, including the Fed, should scrap the flawed Basel III endgame proposal and start over. At this point, the last thing a first-time home buyer, a small business owner, and constituents, as you said, low-income people who are rural people, for example, in my community, the last thing they need is harder access to capital, which is exactly what that proposal does. The public knows.
When is Powell's speech over? They said 1 p.m. Yeah. I don't know if I'm going to take another trade here before lunch. I do think at some point today we will revisit that RTH below. It's just we have to take an optimal route there, right? Nice. Tesla's flirting with going green. But I think it definitely might be exhausted here. Approaching 90 on the daily RSI, that's wild. It might pull back a little. But it does this every summer, man. This is what I tried to show you guys before. This is such ugly price action, dude.
They'll need, how big the losses will be. So I think we'll be working through this. And it doesn't seem to be a systemic problem or one that threatens broader financial stability. It does threaten bank profitability and those sorts of things, but it'll be with us a while. We'll just keep working our way through it.
And the ability to continue to loan to small businesses because you're being locked up. You are not going to have enough time to answer this question, but my remaining outstanding question is around the recent Chevron ruling and, how...
So CPI is coming in tomorrow. It's supposed to be 3.1. I have a feeling it will come in line. Always flexing. Thank you so much for your donation to St. Jude. Yeah, I have cash secure puts on CELH. I think this is the time to dollar cost average in this for sure. But my cash secure puts on CELH are up pretty big. 33% right now. Which is dope. I sold the 55 put on CELH, so up a little over 33% right now. I want to see if we can grab this flush on ES, because I think it will start heading down here.
And staff has been analyzing them, and that's something we're well aware of the concerns that have been raised, and we're thinking carefully about how to move forward on that. The other one was pre-positioning. That's more along the lines of the discount window and the liquidity requirements, I take it. So
right.
So we haven't made a proposal there yet. We're thinking carefully about that. I think we're trying to learn the right lessons from what happened last spring at Silicon Valley Bank and a couple other banks, and one of them just is The discount window worked, but we could certainly modernize it, make it more effective. And also we learned, that bank runs are moving just a whole lot faster, at least in that case. And that even bank runs from 10 or 15 years ago were nothing like as fast as what happened in Silicon Valley. So we need to bake that new learning into the liquidity requirements in some way or other.
He just said the bank runs during 2008. The ones happening now are a lot quicker. That's crazy.
There's been a clear trend of banks stepping away from the mortgage market, kind of in the face of the increased regulation. That's my interpretation, at least. Non-bank lenders have stepped in to kind of fill that void. Today, banks support the non-bank lenders and the broader housing finance system through the so-called the warehouse lending for home mortgages. But I'm deeply concerned that some of the, as was mentioned by my colleagues earlier, that some of the Basel rules could harm both bank and non-bank lenders alike, kind of undermining the liquidity and kind of the raising costs of home buyers. So let me just ask, in regards to Basel III, the endgame proposal, could it make housing finance less stable, I guess, is the question.
So that's certainly not the intention, and we're again well aware of the concerns that have been raised, and certainly paying careful attention to those.
Despite the smaller issuer exemption for the debit interchange fee cap, insurers with less than $10 billion of assets reportedly lost about 35% of inflation-adjusted interchange revenue. Have you considered the impact of further reduction of debt interchange will have on small financial institutions with less than $10 billion of assets?
This price action sucks, man. Serrano, thank you for donating $20, man. Appreciate you. $700 per eval done for the day. What did you trade? Man, definitely missed out on gold. I closed it for almost break even, just a little under break even, but yeah, sucks when that happens, but it's gonna happen throughout your trading career. So, ay. And then got stopped out on an ES scalp. So I'm down like 200 and change for the day. ES and NQ don't look like something I want to trade. Not yet. Say we don't have a soft landing, but a real economic downturn. At which point the market drop would start pricing in lower earnings? What do you mean? I don't understand the question. At which point? Like, you want me to fortune tell? Or give you a month, a date? I don't know what you mean. I don't know, dude. I don't know. What kind of question's that? Are things bullish, bro? Yeah, we might do Discord only live streams from now on. Okay. This is what the weekly chart on NQ looks like. Does this look bullish or bearish to you? Just a question. This is what the weekly chart on the S&P looks like. Does this look bullish or bearish to you? If you had to bet your life savings on that answer, what would you guess? I bet lunchtime will offer the big move. Yeah, I agree. Are things bullish, bro? Yeah, I think we'll get a breakout during lunch for sure. In either direction. If that SMT is maintained, it could be to the downside, but we might get a breakout to the upside too. Yeah, I think I'm going to stay away from NQ and ES for the rest of the day. Wow. CL. Oh, yeah, that's right. We had the inventories at 10:30. It looks like nothing drastic actually happened during the 10:30 candle. That's crazy. Hmm. CL had data. I know, dude. I'm saying it doesn't look like it if you look at the candle. Something happening to Tesla. What does that mean, bro? What is this something happening to Tesla? Yeah, I called out Tesla on the stream for those of you that trade options. Long it from there. Am I long NQ? No. Fuck? Man. Fuck Ninja Trader. Oh my God. Wow, that's fucking awesome. So the play that I had earlier, on ES, oh my God, did it have to be like this? Never closed in Ninja Trader. Amazing. No, I wouldn't go long NQ here. We have crazy bearish divergence. I wouldn't go long NQ here. Deborah says, I had the same issue this morning. Really? Do you trade ES? More NQ than ES, but yeah. Would I short gold? No. No. It looks bullish on the hourly. I do think everything that has a RTH gap below like this, I think this will get revisited. You know, the typical CPI leaked sort of shit. I think you will see these levels get breached later today after this clown show is done. I wouldn't long NQ here. In a retracement, yeah, I might. So SPY a put soon. Do you own SoFi shares? No. I typically don't trade garbage, dude. I mean, don't invest in garbage. I trade garbage. I don't invest in garbage. YM has a lot of liquidity to the downside. I would not bet against a chart that looks like this, dude. Not right now. This is not a shortable chart. What are you looking at? Oh, we only got 278 likes. And there's almost 5,000 people that joined. Yeah, I don't know if I'm going to go live on YouTube tomorrow. I'll just go live in-house. Um, Tesla epic comeback. Yeah, this was the one equity that I called this morning was Tesla. But I might entertain calls on Celsius soon. I might entertain. I have cash secure puts. I might entertain calls on Celsius soon. And I'm waiting on Mara to get back in this ascending triangle. It is lunch right now. We do have Mastermind 7.0 later today at 7 p.m. Eastern. So those of you Mastermind students, I will see you guys there. Session 1 of Mastermind 7.0. There's still time to apply as we're taking enrollments. And if you're approved, then obviously you get in the Mastermind, but you also get lifetime Discord access. That link is in the description. I don't think I'm going to trade NQ and ES today. I am likely going to wait for the PM and see if something sets up. I do think we will potentially get a flush, that CPI leaked effect. It's just a matter of whether we could take an optimal trade to get there or not. Other than that, yeah, missed 2 epic trades on gold. I had called the short from here earlier that completely missed, and then the long from here that I didn't take. The only successful alert that I had was the Tesla one from this 5-minute gap, and right now it's definitely rocking. But yeah, I think I'm going to do calls on Celsius soon. Not sure. I'll send it out in the Discord. Thank you guys for joining. I don't know if I'll go live tomorrow on YouTube. We'll see. If you see an alert, then yeah, come and join. CPI released at 8:30 a.m. tomorrow, PPI on Friday. Other than that, I'll see you guys, some of you guys, on the Discord.